Hello guys, how is everybody? I'm back again with another video on the strategies you can use and what you can use to trade in the forex market and be profitable. I'm going to be teaching you strategies in separate videos, but basically I'm going to teach you strategies like the first one is going to be supply and demand. Another one is going to be how to trade fair value gaps. Another one is going to be market dynamics concept. Another one is going to be breakouts or break and retest. Another one is going to be how to trade when the sessions are just starting, or trading sessions when they are just starting to happen. How you can manage to trade in the sessions when they are just starting to happen. And another one, I'm going to teach you guys another one is going to be support and resistance. Then today in this video I'm going to be teaching supply and demand, how you can find supply zones, demand zones in the market. Supply is a zone where price is likely to react and move to the downside or go to the bearish, or when the bears are taking over the market. The price where the price is likely to hit and move to the downside. That is a supply zone. A demand zone is where price is likely to react and move to the upside, bullish, to the bullish side. The zone where market is going to hit and push to the upside. Now, how do you identify supply zones? An example of a supply zone is, you're going to identify here a consolidation. Let me show you guys a consolidation like this one. You see guys, this consolidation here, that is a consolidation. Now in that consolidation, price is likely to hit that consolidation and move to the downside, but that is not the supply zone. The supply zone here is when you see this candle right here. This is a doji candle here, which I'm going to mark here. This is the doji candle. This doji candle is the one we are marking as our supply zone. Now if you mark the supply zone and zoom to this side, you're going to see that price hit that zone and head to the downside. Now how do you trade these supply zones? You are going to, when price hits here on the supply zone, let me show you guys. When price hits this supply zone here, this one is it. When price hits the supply zone at this zone here, this level here, you're going to see that price is going to tap that zone and head to the downside. Now you're going to place your short position. As soon as this candle closes, and you're going to place your short position when this candle forms the third candle. This is a bearish engulfing candle. You see it engulfed 1, 2, 3, 4, 5, over 5 candles. Now when this candle closes, in the opening of this candle, you first wait. If it is going up, you first wait and place the trade where it has ended with a wick. You place your stop loss above this zone, above there, then you target a 1:2. You can see as soon as the price hits this zone, it went to the downside. You see what brings this reaction to the supply to be our supply zone. You see, when you see this zone here, let me first delete everything. You see this zone here, let me show you. You see this zone here. Let me show you guys. Let me show you. You see this zone right here, this zone. What brings that zone? That zone is brought because here there was an equilibrium in the market. The buyers and the sellers were equal to the buyers and the sellers were equal in amount. That's why there was a consolidation. You see that doji candle. If you zoom into the 5 minutes or the 15 minutes, you can see that there is a consolidation there. That is when buyers and sellers are equal in the market. Buyers are equal to the sellers. Now, if you see a very, very big push to the downside after that zone has formed, and it has formed there are very many fair value gaps here. As you can see, there is a fair value gap here, another one down here. You see, there was a very big push to the downside. That means price has to come and retest that zone before moving further to the downside. That comes when the market is shifting from being bullish and it is shifting to being bearish. The market is changing trend. You see, market is in a downtrend, and here market is continuing to the downtrend. You see, now that one becomes our supply zone. That is how you identify supply zones. Now I'm going to show you demand zones. You see, here is another supply zone. It was right here. Let me show you guys. You see, there was a consolidation here. Then we had this candle. Here, there was a very strong bearish movement here. Now here we mark this consolidation here, the lower the lower low and the highest high. Then we place our short position as soon as the price taps there and gives us a confirmation. You see, we have got a confirmation. We have this candle here and this candle here. It shows us there is a shift in the market. Now you go short with your stop loss above this zone and you target a 1:2 risk to reward. 1:2. You see, it was a winning trade. That's how you find supply zones. Now let's look for a demand zone. A demand zone. You see the market was overall in a downtrend, and it is still in a downtrend. Still in a downtrend. As you can see, guys, here there is a supply zone. Another supply zone is here. Another supply zone is here. You can also mark supply zone as a fair value gap. Doesn't matter, as long as it is near this consolidation, it is likely to react. Here is another supply zone. We are looking for a demand zone. Demand zone. As you can see, guys, let's look for this demand zone. Here is a demand zone. You see, price, a demand zone, we said it is a zone where price is likely to react and move to the upside or go bullish. Now this was a shift, and market was shifting to have this uptrend. Now here we get supply, the demand zones. You can see very well we had a very big move to the upside. From here we had a very big move to the upside with two strong candles, two strong bull candles. Now here we see this one marks to be our demand supply zone, the demand zone. The demand zone can be found when this you see this bearish candle, and you can see this high here. The demand zone can come, and we mark this one here, and we mark it with the lowest low. That is our demand, our demand zone. You see, now here, as soon as you get a confirmation, you go long. You go long with the market. You have your. This was a candle, and it hit this zone and bounced off with this candle here. Now you enter your position by the closure of this third candle. Then you place your stop loss below this zone, and then target a risk to reward of 1:2. See, guys, smooth trade. That is how you identify demand zones. Let me show you another demand zone. Another demand zone is right here. You see, we had a very big move to the upside. From here we had a very big move to the upside. Now price is going to retest this zone. We mark that zone as like this. You mark that zone here. You mark that zone like this. Then price hit this zone and bounced off. As soon as you see this confirmation, you put your long position. The long position here. Then you place your stop loss below this zone, and you target a 1:2 risk to reward. See, smooth trade to the upside. Smooth trade to the upside. Now, how do you get confirmations? Confirmations can be bullish engulfing candles, or bearish engulfing candles, or doji candles. You can see doji candles. Now, there is not every time that the market's going to go to your side. Now you see this big move here. Let me try to show you. This was a big move. I think it was news. by that time. This was a very big move to the upside. Now if you mark this zone, down here, this zone here, if you mark it like this, you can see that the market tapped and started reacting. If you went long on this, and you put your position here and you go long, it would have been a loss. You see, not every time that the market is going to give us what we want. The market sometimes doesn't go in our way. That could have been a loss. Loss is a part of this trading. Now you see there is a supply zone here, a consolidation here, there is a consolidation here, then this doji candle. We mark this doji candle like this, smooth trade. Now you go with your position here, then stop loss above this zone, target 1:2. See, even if here you wanted to go with 1:4, you would have won. So supply zones are very, 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 very good when you're trading forex. Supply and demand. That's all about supply and demand. It is very simple, very simple, very simple. If you want to trade supply and demand is a very, very highly profitable strategy. I think it has about a 70% win rate, 70% or 75%. If you have traded 10 trades, you can win 7. Basically, supply and demand is one of the best strategies because it shows you how to trade what you see, not to trade what you think. You trade what you see, you don't trade what you think. That is all about supply and demand. You just see a consolidation, you mark it, you maybe after the consolidation you get a doji candle. Then if price taps to that zone where you have seen the doji candle, price is going to react and back off to the downside or back off to the upside. That's all about supply and demand. Let me show you the last zone. You can see this zone right here. Price taps into that zone, comes into that zone. Let me show you. There is also a fair value gap here. Price is likely to test fair value gap or the supply, the demand zone. So you can mark both and put your long position. If you see a confirmation after the fair value gap, you can go long. Put your position here, then stop loss below this level, then you go below the level, you go for 1:2, smooth trade to the upside. Or you can be targeting the highest high. If it breaks the high, that means price is going further up. So that's all I have for you guys. That is the best strategy I can get for you. I'm going to teach you about 6 strategies in separate videos explaining each. So follow for more content, subscribe to the channel, follow for more content. See you in the next video.